The market is off to a strong start in 2025, but tariffs may derail the rally. So the S&P kicked off the year strong, finishing January up almost 3%. So far this year, we've seen overall markets broadly rally on optimism for a stronger business environment. However, the one outlier has been AI after the DeepSeek news last week. So the AI trade has been driven by massive data center spending by hyperscalers, and investors have already grown skeptical of that spending. Then the DeepSeek news dropped. While the jury is still out on its legitimacy, it has already absolutely shifted the discussion around spending. It put a spotlight on whether AI models should place more focus on efficient use of computing power to drive adoption rather than just accept the power usage and scale more. This is likely good for hyperscalers, but may dampen the AI server supply chain outlook. Don't get me wrong, AI is still likely to grow and needs more servers and data centers. However, the buildup may just not need to be as massive as it is currently. So outside of AI, other sectors were generally stronger in January. With the change in the White House, markets were looking forward to more favorable business conditions going forward. While there was a flurry of policy changes on Inauguration Day, tariffs were noticeably delayed to start in February. Markets rallied on that optimism that negotiations could happen before anything gets imposed. So that brings us to February, the moment of truth. Over the weekend, the White House announced 25% tariffs on Canada and Mexico and 10% on China starting on Tuesday. There are also essentially no exemptions outside of some lowered energy tariffs. So we expect markets to open February down on Monday. Tariffs and what may be the start of a trade war will likely be the focus throughout the month and possibly beyond. Canada has already announced retaliatory tariffs, and Mexico has promised retaliation as well. We would expect the near-term disruption to, at least near-term, impact inflation as well as place more pressure on the economy.